Welcome back to the channel. Today we're diving into the world of bargain hunting, but instead of thrift stores, we're looking at the stock market. We've handpicked a list of companies that we believe are undervalued and poised for growth. Remember, investing in the stock market always carries risk. So make sure to do your own research and consult with a financial advisor. Stick around because we're about to break down 9 stocks that could be great additions to your portfolio. First up, we're taking a look at LEU, a company that's been flying under the radar but has some serious potential. LEU has faced some headwinds recently, from industry-wide slowdowns to company-specific challenges. But I believe these challenges are temporary. LEU has a strong track record of innovation, a solid management team, and a loyal customer base. Their financials are looking pretty healthy, with a strong balance sheet and a clear path to profitability. If you're looking for a company with solid fundamentals and the potential to bounce back stronger than ever, LEU is definitely worth a closer look. Let's move on to our next stock on the dip, HBB. Next up, we're diving into the world of HBB, a company that's not afraid to disrupt the status quo. HBB has always been at the forefront of innovation, constantly challenging the norms and pushing boundaries to create something extraordinary. HBB has been on a bit of a roller coaster ride lately, experiencing the highs and lows that come with being a trailblazer in a competitive market. With its stock price experiencing some volatility, it's clear that the market is reacting to the company's bold moves and ambitious projects. But this dip presents a unique buying opportunity for savvy investors. Those who understand the potential of HBB's innovative approach can see the value in investing now, while prices are lower. HBB's industry is rapidly growing, with new advancements and technologies emerging at a breakneck pace. This growth is creating a fertile ground for companies like HBB to thrive, and HBB is well positioned to capitalize on this trend. The company's leadership has a clear vision for the future, with strategic plans that align perfectly with industry trends. They've got a first-mover advantage, a strong brand presence, and a reputation for quality and innovation that sets them apart from the competition. Their loyal customer base is a testament to their success. Customers trust HBB to deliver cutting-edge products and services that meet their needs and exceed their expectations. HBB is also laser-focused on innovation, constantly developing new products and services. Their R&D team is always exploring new ideas and technologies to stay ahead of the curve. From groundbreaking new products to revolutionary services, HBB is committed to staying at the forefront of the industry. Their dedication to innovation is a key driver of their success. For investors who are willing to embrace a little volatility, HBB offers the potential for significant long-term growth. The company's innovative approach and strategic vision make it a compelling investment opportunity. With the potential for substantial returns, HBB is an attractive option for those looking to invest in the future of innovation and technology. Now let's shift gears and talk about SSP, another company making waves in the industry. Now let's talk about SSP, a company that's been through a rough patch lately but is poised for a comeback. SSP operates in a cyclical industry, and recent economic headwinds have taken a toll on their bottom line. But SSP has been through downturns before and always come out stronger. They have a rock-solid balance sheet with low debt and plenty of cash on hand. For investors with a long-term perspective, this dip could represent a fantastic opportunity to buy into a quality company at a discounted price. SSP, in my opinion, is one of those opportunities. Now let's move on to GCTK. Next on our list is GCTK, a company that you might not have heard of but deserves your attention. This relatively unknown entity is quietly making waves in its industry, and it's time we shed some light on its potential. GCTK is a smaller player in a rapidly growing niche market, quietly building a solid business with impressive growth potential. Their innovative approach and commitment to quality have set them apart from the competition, making them a company to watch. GCTK's stock has taken a hit recently due to broader market trends and some short-term concerns. However, these dips are not reflective of the company's long-term prospects. The market's current volatility has created a temporary setback, but this could be a blessing in disguise for savvy investors. This presents a unique opportunity for investors who recognize the underlying value in this company. By looking beyond the immediate market fluctuations, one can see the strong fundamentals and strategic vision that GCTK possesses. GCTK is incredibly undervalued compared to its peers. suggesting that the market is not fully appreciating their growth potential. This undervaluation is a clear signal for investors who are adept at identifying hidden gems in the stock market. For investors who are comfortable with a bit more volatility, GCTK could be a hidden gem that delivers significant returns. The company's innovative products and strategic market positioning make it a strong candidate for future growth, despite the current market conditions. Now let's move on to ILLR. But remember, keeping an eye on GCTK could pay off in the long run as the market begins to recognize its true value. Let's talk about ILLR, a company that's been facing some challenges lately but is poised for a turnaround. ILLR has been hit by a perfect storm of negative news, from industry headwinds to company-specific setbacks. But I believe these challenges are temporary, and ILLR's long-term prospects remain bright. ILLR has a diverse product portfolio and a global reach, which helps to mitigate risk and provide multiple avenues for growth. Their management team is experienced and has a clear plan to turn the company around. For investors who are willing to be patient, ILLR could be a rewarding investment. Now let's shift our attention to FGF. Next up is FGF, a company that's been tested by the market but has the resilience and resources to come out on top. FGF operates in a highly competitive and cyclical industry, and recent economic conditions have put pressure on their earnings. But FGF has a rock-solid balance sheet with low debt and plenty of cash on hand. They have a proven track record of innovation, constantly developing new products and services. For investors with a long-term perspective, this dip could represent a fantastic opportunity to buy into a quality company at a discounted price. FGF, in my opinion, is one of those opportunities. Now let's move on to RITR. Let's take a look at RITR, a company that's been flying under the radar but has the potential to deliver significant returns. RITR operates in a niche market with high barriers to entry, giving them a competitive advantage. RITR's stock has been under pressure lately due to some short-term concerns. This presents a unique opportunity for investors who recognize the underlying value in this company. RITR has a dominant market share in their niche and is incredibly profitable. For investors looking for a company with a strong competitive position and the potential for significant growth, RITR is worth considering. Now let's move on to PACS. Next on our list of stocks on the dip is PACS, a company perfectly positioned to capitalize on the explosive growth of its industry. PACS operates in a sector that is seeing unprecedented growth, driven by technological advancements and increasing demand for innovative solutions. This company is not just riding the wave, it's helping to create it. PACS has been quietly building a solid business, with a strong track record of innovation. Their product line is diverse and cutting-edge, addressing the needs of various industries. From healthcare to finance, PACS's solutions are making a significant impact. The company's innovation lab is a hub of activity, constantly pushing the boundaries of what's possible. PACS's stock has experienced some volatility lately due to broader market trends and short-term concerns. However, this should not overshadow the company's long-term potential. Market fluctuations are a natural part of the investment landscape, and savvy investors know how to navigate these waters. The recent dip in PACS's stock price could be a golden opportunity for those looking to invest in a company with strong fundamentals. This presents a unique opportunity for investors who recognize the underlying value in this company. PACS's financials are robust, with steady revenue growth and a healthy balance sheet. The company's strategic initiatives are designed to drive long-term value, making it an attractive option for those willing to look beyond short-term market noise. PACS is operating in a market with massive tailwinds and is well-positioned to ride this wave. The industry is expected to grow exponentially in the coming years, and PACS is at the forefront of this transformation. Their team is dedicated and highly skilled, working tirelessly to stay ahead of the curve. The market trends are in their favor, and the company's strategic vision is aligned with these trends. For investors who are willing to embrace a little volatility, PACS offers the potential for significant long-term growth. The company's long-term growth prospects are supported by its innovative product pipeline and strategic market positioning. Investors who can weather the short-term fluctuations stand to gain substantial returns as PACS continues to execute its growth strategy. PACS, a company with its finger on the pulse of the future, could deliver impressive returns. Their commitment to research and development ensures that they remain at the cutting edge of technology. Financial analysts are optimistic about PACS's future, citing its strong market position and innovative capabilities as key drivers of future growth. The company's focus on sustainable and scalable solutions makes it a compelling investment choice. Now, let's move on to our final stock, GSUN. This company also shows promise, and we'll delve into its potential next. Last but not least, we have GSUN, a company that's been beaten down by the market but has the potential to surprise a lot of people. GSUN operates in an industry that's out of favor right now, and their stock has taken a hit. For contrarian investors, GSUN could be a hidden gem. GSUN is incredibly undervalued, with a strong balance sheet and plenty of cash on hand. For investors who are willing to take a long-term perspective, GSUN could deliver significant returns. Now let's wrap things up with a quick recap. That's it for today's video. We've covered a lot of ground from LEU to GSUN, exploring companies that are currently on the dip but have the potential to rebound. Remember, investing in the stock market always carries risk, and past performance is not indicative of future results. Conduct your own thorough research and make informed decisions. If you found this information helpful, don't forget to like, subscribe, and hit the notification bell. Happy investing!